Hey everyone, this is Day Trader Rockstar for Day Trading Radio, and this is a new segment I'm starting called Day Trader Rockstar Playbook. Just basically what I want to do is do an educational video series breaking down my favorite chart patterns, what I want to call my in my playbook. I always like to refer back to a playbook or some type of methodology, because when you stick within the methodology, it kind of takes the emotion out of the trade, other than having the emotional side of things and getting really chucked around. So the methodology and the high probability setups, the multiple indicator setups, which I use, kind of puts me in a place where I am waiting for the setups to come into play, meaning that the risk is coming off, the reward goes up. So these are risk-reward plays, high probability setups that consist of multiple indicators, 5 indicators, plenty of videos out there on my indicators. But to break it down a little bit more, let's say we wanted to say if there was like 5, 6, 7 different setups that I like to trade, I like to break those down in this series for you. So this is going to be the Day Trader Rockstar's playbook of stock trading tactics, and this is one's called the downward wedge. I love the downward wedge. Lots of times you'll see 2 angles of the trend lines. Again, we'll just go over a little of the educational part of it and how we determine it's a downward wedge and how do you trade it and what are you looking for to come from this. So that's what we're going to break down. Again, over years of trading, you come to recognize different patterns. The wedge pattern is pretty much as you would expect it to be. A wedge is just 2 downward sloping lines which eventually connect in a wedge. Think of the wedge that you put under a door or chop wood with. So that's basically the wedge. But we never really trade a wedge all the way to the end. The wedge pattern has some studies on it, and I've also done my studies on it, and I find out that the wedge pattern, I would say 80% or more, breaks out to the upside about 65 to 75% into the pattern. Sometimes it goes a little longer. Very rarely does it go shorter. So anywhere around that 70% area. And again, when I break that down and I explain that to me, I say, all right, so if you have a wedge pattern or a possible wedge pattern where there's 2 angled lines sloping in towards each other on a downward bias, you would just kind of calculate where the beginning of that wedge would start, and that would be, of course, the beginning, and kind of calculate where the end would be, the midpoint, which would be 50%, and again, that would be the 75% area and the 25% area. Give or take, it's, I'm freehanding here. But that's how the concept of 75% area of the wedge pattern. Now, this one hasn't broken out yet, and we're just about in that range that we want to watch this for. So that's why you would actually consider this a higher probability setup, because first of all, the formula tells you that you're about to get the breakout to the upside. The other thing is, the important part of downward wedge pattern is the lower line. You always want to try to get the trade as close as you can to the lower line. So when this went out as an alert last week, everything was set up. We have the stochastics being set up, and we have the lower trend line. We understand the directional sides of the trade and the pattern. So all these things leading together really makes this one of the better setups. And you're buying into weakness, so you're removing the risk from it. You're getting the momentum switch on it. And the pattern is very powerful in itself. Now, again, when that's set up there, hopefully you're able to spot this and you take your position. You have to remember, as you're getting down into the pattern, as the pattern's closing up a little, your risk, your risk reward is getting better and better. So even if you miss this area here, you have to realize that now, because you're down here, you're probably looking for a breakout and the stock to move up here. So even if you don't catch that and you end up seeing the stock around, here or pulls back, you're still in a pretty decent area considering the pattern. So always consider that. I mean, we all want to always get the best price available. We'd take it any time off this lower trend line, but you have to be on top of it. You have to do your research. You have to, get the 10 for 1,000 watch list. So let's talk about another key ingredient of the wedge pattern. The wedge pattern also has a formula which you can measure the what we call the measured move, or the profit taking areas on the wedge pattern. So a wedge pattern, when it breaks out, typically there's a couple of different formulas. I have my own little formula that I've kind of hybrided. I guess that's a word. It's kind of a hybrid formula. Normally, you'll see wedge patterns, inverted head and shoulders, channels. They have a formula basically just based off their pattern. You would take the length of the top of the channel, and then where we broke out, you would extend that, and that would be your target. So, but what I like to do, and this gives us a timing. We'll show you that. We'll show you that happening right now. We'll take this and we'll extend that down, basically just like that. I'll move it over to if we're breaking out. I'm saying if we were breaking out, say we break out there, that would be your overall target on the pattern. But we probably wouldn't end up holding that long. So one thing about a great wedge pattern is once a wedge pattern, you see a really good constructed wedge pattern, what you could do is kind of gauge where you're going to get the breakout. So to be able to predict where this is going to break out, not using the 75, but almost giving you an exact area, not just using a percentage area. What I do when you have a very established high probability wedge pattern like this is I'll take the top of the wedge pattern and extend it out there. I'll extend that line out. All right. And next, I am gonna take the opening side, the opening width of the wedge. I'm gonna take that, and then take that top part of that shadow area, that opening, and we're gonna extend it across. Let me show you what we do here. We're just gonna take this, and we're gonna just drag the top of it across that line up here. And when we keep this on the top part of the line, and when this bottom area comes into check with this line, that is the breakout area of the chart. So we just extend that all the way down, just pretend it went all the way down, and we move this bar over. Remember, this bar, this shadowed effect here is really the width of the opening of the wedge pattern. So what we're going to do now is we're going to just move it. We're going to keep that on the top of the line, and we're going to move it right along here, right along, right along, right along, right along, and we come out to it, right in this area. So this is really where we want to look for that breakout. Now that we know, from that formula and from some other, the 75, this really actually moves right into that 65 to 75% area. So this actually plays out really nice with that. Area is right in this level too. So everything pointed to a breakout of this pattern in this area. So then you just go back and you measure yourself out, saying, well, if I'm under this level at this point, where's your risk reward coming in? Well, anything below this level at least is definitely a good risk reward. Most likely we're not going to get a pullback there and a bounce here. Most likely we're going to get a little pullback like this, and then a breakout like this. So that's what we're going to be looking for. But that's how you kind of set yourself up. The ultimate trades are when you get them down here. Very easy to see. Just have to be a part of it. You already have an established trend line. You should be able to establish this trend line at least by here. Extend this down, take this trade, especially on that reversal candlestick. Whenever you see a support line, oversold stochastics, even a reversal candlestick, that's multiple indicators telling you a reversal trend that pushes back up. Again, came right back down to the trend line, popped right back up. Now you're pretty close to breaking out of this pattern overall. You could break it down to the 60-minute chart and get a re-entry when the stochastics pull back. That's one way of doing it, but we're just going to stick to the overall pattern. If you do get a pullback, you want to watch that, or just watch for continued breakout here. So that's the wedge pattern. I love to trade them. That's the first play in the playbook of the new series here, DayTraderRockStar's playbook, stock playbook. Kind of outlining my favorite stock setups and how I like to trade them. Hope you enjoyed that, and I'll look forward to the next one very soon.